All right. Obviously, last week the markets were absolutely falling apart. They're falling hard to the red. And I think that I've picked some great stock setups for us this week, and I think they're going to be real money makers. It's hard to guess or to estimate the direction of the markets, but I've poured over 3 charts for you today, and you know one of them is going to be Tesla, and I do think that I've got a direction that I think we're going to achieve technically, and I'm going to be looking to make some swing trades on the technicals that I'm giving you guys on Monday and Tuesday and going into next week, and I have an opinion as to which direction the markets will go. Obviously, I do not know. It's just a guess, but follow along because there could be thousands and tens of thousands of dollars made on the decisions that I'm going to be talking about here today. This is the Stocks with Josh show. Thank you for joining me. You guys can see I'm not in my studio. I think I am in Mississippi today. I'm actually having a great time traveling, and I will be back to San Diego soon, where I'll be back in my studio. But you know I'm trying to keep everybody up to date with the trades that I'm looking at the companies I'm looking at. We've got a couple good ones for you guys today. Thank you for everybody that already hit the like. And if you need help trading these choppy markets, if you need help determining what's happening next with your favorite big tech stocks, this is the channel for you. Hit the subscribe and hit the YouTube all notification bell. Okay, let's dive into it. We're just going to start off by looking at how the week ended. We're going to look at the heat map of the S&P 500, and it was a bloodbath. It was a sea of red. There were no outliers. Well, I will say there actually was an outlier that stood out to me, and that was Netflix. And I started noticing a ton of people that were ready to short Netflix. But guys, it already got beat down, and now it was one of the few stocks that was popping at the tail end of last week. And so there are better picks, in my opinion, to be shorting, whereas Netflix came out with good earnings and they might be turning around. I'm not covering them today. I'm just throwing that in as an extra. What we're going to be looking at, we're going to be looking at Tesla, which had an absolute extreme pullback. And I'm talking, this thing was cooking hard to the downside. It came down an additional 3.75% Friday. That was another $8 after it had already experienced a 10 to 11% pullback on Thursday. It's way outside its Bollinger Bands right now. And I mentioned it before, when stocks get outside their Bollinger Bands like they are right now with Tesla, they want to go back inside. They want to go back to the moving averages. It's extremely outside its Bollinger Bands, and I think we're going to get a retrace back into the Bollinger Bands. But I've got some strong opinions as to what's going to happen with Tesla overall and how low I think we might go and what we technically have to achieve to the downside before the real buyers flood into Tesla. So, stick with me on this one. I'm going to show you guys my game plan. So right now, I told you in my last video when I covered Tesla that we were likely going to fall between 215 and 211. 215 is a strategic support. 211, 210 is a strategic support. That's exactly where we ended up Friday. Now, I looked at the 4-hour chart, which is the 4-hour RSI on Tesla, and this thing was way oversold. The last time it got this oversold was at the tail end of December of 2022, right before Tesla hit $101 and then had a monumental turnaround, spending the next 6 months going up to $300. And just like I said in my Friday video, when I had warned everybody to take profits and to sell Tesla at 300, and we know the old story that hogs get slaughtered, people stayed in it, they bought the top, and I had even said the day before earnings, the day before it hit 300, I said to everybody, there's a lot of people that are thinking it's going higher right now, but this thing's already run up 200% in the last 5 months. So you just have to understand the nature of stocks. They work with moving averages. At that point, it was too high to the upside. Today, we're too far to the downside, which means we're going to come back. I see us before the end of this year back at 250. Right now, I think it's an opportunity to buy. But again, I'm going to break it down slowly for you guys. One of the things that we have to talk about is this news story that's come out on Elon Musk targeting his reaction to the earnings. But before I bring that news story up, I just want to say all the news stories have been just terrible. People coming along and just absolutely, for a lack of a better term, crapping on Tesla, just talking about them. Oh, it's just turning into a legacy car maker, nothing special, not a technology company. It's amazing that when you're down, you guys know in life, people come along and they kick you. So Tesla was having a down day. Elon was having a down day, and there were plenty of people getting in line to kick him. But you know what? We're going to go against that grain because I see opportunity here. I want to bring up this first news story because I have to acknowledge some of the truth in it. Elon Musk acted like a little baby on Tesla's terrible earnings call. And I have to say that I do agree. Man, he was so mopey. His countenance was down. And I was thinking back to Q1 earnings where he was stoked. And he was like, we're going to kill it this year. We're going to make 2 million cars. We're going to grow 50% year over year. He was pumped Q1. I loved Elon. Q1 earnings Elon. That's the guy I liked. This Elon was just like this article was saying. He was acting like a little baby, making excuses rather than giving us a game plan. Now, let's just acknowledge what he said was not untrue. There are some economic headwinds that have nothing to do with the foundation that Elon's laid in Tesla that are absolutely causing them to not hit some of their goals. But you know what? That's a recession. That shows us that there are some deflationary dynamics in this market that we have to acknowledge. And you know what? He was acknowledging them, and he was doing it in a very sad way. But even though this is a down moment for Tesla, I'm not going to kick him, not because I love Tesla, not because I love Elon, but because I love the opportunity that this company represents, which is a company that genuinely is so far out ahead of their competitors, who has such a large moat. They're getting good news stories, and they've done a great job in 2023, and I think that we're going to see upside in 2024. I think we're going to see upside from where the price is right now in 2023, and that's why I'm excited about trading and long-term investing in Tesla right now. So let's just kind of go through some things. Let's talk about the technicals of Tesla. Tesla reached, like I said, the most oversold reading on the 4-hour RSI chart since December of 2021, which means every time it got this low, it absolutely had a pop. Where is the pop going to come? Is it ready to pop? Well, I'm going to go through the technicals very carefully with you guys so that you just don't understand the message. Don't buy the message. Buy the detailed technicals. I'm not going to tell you to buy anything. This is not a suggestion for you to buy, sell, or hold, but this is a suggestion for you to look into the charts, do your own due diligence, and see if any of this makes sense to you. So I see support right now. We're beneath a support at 215. That's the 200-day moving average. And I think it's ultimately going to work as support. I don't think we're going to spend a lot of time beneath the 200-day moving average. I don't see a bigger breakdown. However, we could have some more pressure and selling pressure to the downside beneath this price, which could operate as a spring back above it. And so you need to be aware that as far as the next week goes, we could come down to 195 and even as low as 184. But I personally do not see it going much lower than that. So the two support ranges I want you to mark on your own charts is 195 and 184. And right now I see that even as Monday is concerned, it's likely that we'll get a little bounce because the way that it's oversold just seems too much. And so the bounce that I'm thinking that we might get would be at bare minimum to 222. 220, 222 Monday or Tuesday, and it could even go as high as 227 or 229. But I think we will get some movement up. But I think because of the macro environment, we're going to continue to push down until we hit a few more lower metrics. And so even though the downward momentum is going to cool and we are going to have a little push back up, there's going to be more selling pressure, which is going to cause us to at least hit 195 on Tesla. Anywhere between 195 and 205, in my mind, is a load up for me, for my long-term investment. And I'm going to be looking to take puts when we move up. If we moved up to 217 or 222, I would enter some puts and continue to ride the downward selling pressure of this market until I feel like we get to that 205 or maybe that 195, and then I would ride some calls. But you've got to leave yourself some time. If you do expiring, same day expiring, or even end of week expiring, you could get roasted, toasted, and lose a lot of money right now on Tesla calls or Tesla puts because it's going to be super choppy here at the bottom of this Tesla chart. All right, guys, I'm going to cover one more for you guys. It's super important because I just felt like you guys need to have these charts in front of you, and that's going to be Meta. But before I do, let me take a quick station break to talk to you guys about the Discord and the Patreon that I started with the Stock Squad. That's Stock Up with Larry Jones, Keenan Grace, and Stockmo. We're feeding people our technicals, our buys and our sells in that Patreon, in that Discord. Every single day, there's great information in there and a great trading community. Don't trade these markets blind. Don't trade them alone. Click on the link in the top pinned comment and come join the Discord. Okay, in addition to that, if you need a better trading platform or you need better trade tools, check out the offer from the Moomoo investment app. It's a zero cost to trade platform and they're giving away free stock, up to 16 free stock, as well as a guaranteed share of SoFi. That's their current offer. Click on the link. They're available in Australia, the United States, and Canada, and each country has its own offer. Click on the link to see the offer for you. Get your free stock. Start investing with better trade tools. Okay, let's talk about Meta. What's going on with Meta? I'm going to really tell you guys that the overall chart for Meta still points bullish, but not in the close term. We've got some pullback in these charts for Meta, and I'm just going to point out the things that I see that you guys, I want you to see. One, if you go to the weekly candlesticks, you've got an ugly, terrible weekly candlestick at the top of the move, which absolutely signals more downside pressure. In addition to that, on the Friday sell-off, it was selling off on increased volume, which meant that the downward move had momentum, which means that there's going to potentially be more downward move. Now I see support for Meta at 310, which I believe we're right around, and then beneath that as low as 298. But let me just dial things in so they're easier for you. This is what might happen. This is just a technical guess. I don't know if it's going to happen, but this is how I might consider playing it. If it pushes back up and retests what was support, which now could be resistance, the 310 level, that's where I will consider adding some puts. And if it begins to sell off, I will scale, and we could go as low as bouncing off the 50-day moving average at $302. That seems to be a no-brainer. It almost seems like it has to happen. Just my view, right? I don't have a crystal ball. But it even could go and bounce off the 100-day moving average, which would make a lot of sense in light of how high this has climbed from the $85 range at the beginning of 2023, way up here at $333. And so if you don't think it's going to pull back and it needs to bounce at bare minimum off the 50, but I think more likely off the 100-day moving average, that makes sense. The 100-day moving average price that it could settle at would be $298. And so we have some room down. I also want to point out that we absolutely got a double top on Meta. So the double top, the weekly bearish candle, the current macro environment, the fact that we've ran up for 6 months and have yet to really have a big correction on Meta tells me that we are definitely going to come down to 302 or 298. In my opinion, that's just what I see. That's just the risk I'm going to take. I'm going to be looking for any pop-up to enter some puts for some profit on the way down on Meta. I wanted you guys to have that. Don't go in heavy on anything because these are going to be choppy markets, so be cautious. But there's definitely going to be money to be made on these choppy markets. Guys, let me just conclude with a couple more thoughts. One, I want you to know that we are not out of the woods. We had a pretty big sell-off, so there's going to be a little bump back up, right? But then I think the selling pressure is going to accelerate as the fear accelerates. I've talked with you about the VIX. The VIX is not signaling that the selling pressure has peaked enough to enter long back into these stocks. And so we're looking to take the market down, not up right now, or we're looking to scale into long-term positions on some of our favorite stocks. Tesla moves quicker. Nvidia moves quicker. So by the end of this next week, and even throughout this week, might be a decent time to dollar cost average into companies like Tesla and Nvidia because they're going to move the fastest out of the Magnificent Seven to the downside. Tesla and Nvidia are over $100 off of their lows. I see the potential for Nvidia to come down even lower, but we've got to watch that neckline at 409. It's yet to break. It's yet to be confirmed. But I do think that there's going to be an increase in selling pressure, but some of the ones that have moved down the fastest, the soonest, are also going to be some of the ones that hit the bottom and reverse the soonest when others are still going to be coming down. I see that to be the case with Tesla. At least that's my opinion. One last trade setup that I want you guys to be thinking about. We're still working AMD to the downside. I entered an AMD call just to keep an eye on it so I can get used to the price action, but we're still buying puts when it pops up to the downside. I think we'll get to $100 even, between 100 to 101 bare minimum if we don't touch the $99 area. So until we get there, if we're at 102 or 103, we're buying puts to the downside still, so keep that on your radar. I hope that all of this helps you, but I'd love to get feedback from you in the comment section. First, don't forget to hit that like if you haven't hit it. 20, 30,000 views, sometimes only 2,000, 3,000 likes. Pump up my likes if you guys are liking what I'm delivering to you. I'm taking time away from my family. I'm out here in Mississippi visiting some lifelong friends, but I'm taking time for you guys, so just do me a favor, hit that like, show some love, throw a comment, throw a heart in the comment section for me. Hit the subscribe if you need the next video and you need some better technical understandings of big tech. I'm here for you. Love you all. Peace and blessings. Take care.